G'day, it's Pico Konstantinos here, and today I want to discuss the gold price. Is gold about to break out upwards big time? Before we go any further, please smash that like button as that would really help me out. And if you enjoy this content, please consider subscribing and that will allow me to make more and more videos that people find valuable. So what's been happening with the gold price? And why is there a potential for a major breakout just about to happen? Well, let's get into the charts and have a look.
Whenever we're looking at charts, or whenever I'm looking at a chart, I really want to start off with the big picture. So I look on a chart that has the highest amount, or the largest chart I can find. So in this case is monthly. So what the monthly chart means is basically each candle represents a trading month. So you can look back and look at each candle being a trading month's worth of price action. So if we look at the big picture, we can start to see there was a massive uptrend during the 2000s in the gold price. And that spiked into one big spike around about the 1900 US mark. Now, since then, it's traded downwards and then flat. So it's created a bit of a curve here. So it traded close to 1,000 US. So I guess it fell nearly half from close to 2,000 to 1,000. And then from 1,000, it was slowly trending upwards. And then it sharply trended upwards recently. So let's look at the weekly chart. If we could go back, and basically each candle on this chart now represents a single week's trading. Just gives us a bit more view what was happening during those months. So one thing it does here is it shows us the COVID period. But if we look at the daily chart, that'll give us even more information. So spread that out. This is what happened during COVID. So you can see there was a sharp spike down when COVID first started being announced with the rest of the market. So there was a bit of a sell down, but it only went down to about 1450 US, and then it quickly regained back to where it was pre-COVID, traded sideways, and then really ramped up. So it ramped up sharply as everyone was starting to worry about the effects of COVID, all the effects of the stimulus, the effects of inflation, etc. But after that, as you can see, it's sort of been trending downwards. So it hasn't gotten back to that high above 2,000 US. It's been trending downwards since then, and this is the recent daily price action. Is with some moving averages. So we've got the daily chart up now. So the two probably most popular moving averages is the 50-day moving average and the 200-day moving average. So it's just to get a real look at the big picture, probably what we want to do is start off with a 200-day moving average. So let's put that on our chart. If we go back a bit, we can see that from around about 2019, this 200-day moving average has turned upwards. So a lot of investors will look at if the 200-day moving average is trending up, they would take that as a sign that the whatever price, whatever commodity or stock we're looking at is in an uptrend. So a lot of people looked at this starting to move up and continuing up. So gold was in an uptrend, and they would say that maybe it would stay in an uptrend until it starts moving down. So with the 200-day moving average, you can see it remained upwards and has only recently started trading down, and that's because of this recent downwards price action that has occurred since that peak. So the next moving average that is extremely popular is the 50-day moving average. So if we apply that to the chart, we can see that it's a lot more volatile in regards to it goes up quicker when the price goes up quicker, and when the price starts to drop, it'll start to drop. So it's a lot more closely aligned with current price action because it's only looking at the previous 50 trading days. So as you can see, the 50-day moving average goes up when the prices goes up, comes back down. So in many cases, it came close to this 200-day moving average, came up, comes pretty close, but keeps rising with as the price rises. And if the price is in a bit of an uptrend, normally this 50-day moving average will stay above the 200-day moving average. So some people will use that even as an investing strategy. Once the 15-day moving average crosses, they might buy and they'll hold until it breaks. So as you can see, the 50-day moving average here was probably the furthest it's been from the 200-day moving average. So that's also a good trigger. So that sort of means things have started to really move quickly, and that's because of this great spike upwards. So since the price action's been coming down, this 50-day moving average here crossed the 200-day moving average. A lot of people might take that as a bear type signal. That's called what we call a death cross. And then it's traded down, but recent price action, so this recent move downwards, so we've had two sort of a double bottom, and so the price came down to this 1670 mark, rose a bit, came down to that mark again, and has risen upwards. So we might call that a bit of a double bottom, and that could mean that the bottom for the gold price is around this level, and that level may not get hit again now if the price continues upwards. Recent downtrend in the gold price. So what can be very valuable is just putting a line through the top points of the current trend. So in this case, we're looking at the uppermost points where the price is written. So we take the line from the highest high, and if a number of times the market has come back to that level, we can call that a bit of a downtrend line. So it doesn't have to be exacting hitting the top, but it just has to come to where they've relatively risen to. So as you can see, from that high above 2000, the price has tried to rally a number of times, but hasn't been able to rally past this high. And each time it's rallied, it's been a little bit lower. So as you can see, each rally, so lower highs, what we call that. And you could even do a line down there parallel to this one. And what we could say about this current price action, it's been in a bit of a downtrend channel. So if you'd have two lines together, you can call that a bit of a channel because the price action has been basically contained in a bit of a downtrend channel. As you can see, each time the price has sort of gone near this downtrend channel, or each time it's tried to rise, there's actually been a pretty quick sell down. So in this case where it rose above 2000, there wasn't many trading days before the price came all the way back under 2000 US. As you can see, it spiked up here. 1 or 2 trading days, it was pushed back down. Now this was a big attempt here to rally, so it got up to about 1950, but straight away the price was pushed down. So I want to pay more attention to the current price action where we are. So the last several trading days, the price has started coming up to this downtrend line, but it hasn't been sold down quickly. As you can see, the last several trading days have been around about that 1840 US down to about 1810, but it's sort of stayed close to this downtrending line. And that's one bullish factor of why we might think that the price is ready to break out. So what we're going to look for in a breakout, let's have a look. Well, basically we want to see the price break this downtrend channel. So we want the price to sort of come up above the channel and we want it to trade for not just one day, because what would happen is if it just came up for 1 or 2 trading days and then sold straight back down, then like these other circumstances, then we would call that a failed breakout, and then what we might consider is that the downtrend would continue in the midterm or short term to midterm. So we want to see the price trading above this downtrend line for several days, so several trading days. And then what can often happen is that the price can sometimes have a breakout, come back to sort of close to this downtrend line, but we want to see it stay above it. So we don't want to see it come all the way back down, but just a short sort of retracement. And then from there, we really want to see a price moving higher. We want to see a new high, so above that, and then it could hopefully keep spiking up and get above that previous high. And then basically there'd be a lot of momentum. There's a lot of bullish power behind that movement. Is looking like it could potentially break out big time in an upwards direction. So first of all, we've got our moving averages. So we've got our 50-day moving average has turned up. So short-term momentum is upwards. We've got a 200-day moving average that's flattening out, and this creates a potential golden cross activity. So when this 50-day moving average, if it can cross this 200-day moving average, a lot of investors, a lot of market observers will take notice, because it's a very, very strong bullish sign. So look out for that potential. All it really needs is some continued upward movement in the gold price, and this 50-day moving average would cross over the 200-day moving average, creating what is called a golden cross, which is a very bullish indicator. The other strong factor towards a potential bullish breakout is the current trading very close to the downtrend line. So several days of trading close to that downtrend line creates more pressure, creates more potential that the breakout will occur upwards as opposed to a short sell down. And the reason for that is once the price has gotten close to this downtrend line, there hasn't been any major selling so far. So the price has continued to have some strength. What we call the bears or the sellers haven't been able to overpower the bullish or the people buying. So at this stage, the bulls have some pretty strong momentum because there was a double bottom. They've been able to bring the price up. So the bulls or the buyers have been able to bring the price up, and the bears or the sellers haven't been able to sell down the gold price like it has on previous occasions. So the potential there is for a very, very strong breakout in the gold price.
This is Biko Konstantinos. Thanks for watching my video, and may the trades always be in your favor. Over and out.